Good morning, traders. Paul here with GammaEdge. Today is Wednesday, hump day, the 25th of January. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, starting to see a few more cracks in the ice. Overall though, short-term, long-term timers are long. That's a good thing. We are seeing some pausing in what we call the TIKRC, that is the kitchen sink tick indicator, so US composite, and one that's been leading for some time and probably does need to take a breather, the NASDAQ, the Qs, the TIKQ. They are moving more or less horizontal and they can break either way. That's important. Note the Russell 2000, which is measured by the RLC, it's headed downward. Small caps are getting pummeled. They never really participated in this recent rally, and this is indicative of potentially where we could go. More on that in a little bit. We note we are in a railroad track up pattern, day 2 of that on the ARCX, which is this TIKRC, and the cumulative tick is long. We're in pretty good shape there too. Long term, the ribbon you'll see is in an uptrend, and that's a good thing. Market breadth still remains positive. This is notable. We haven't been here for a while. Notable, the February-March timeframe, almost a year ago, is the last time we had any type of move like this. So probably want to go back and you want to review some of that. We are now 15 days to the upside. The left and right goalposts, which we denote as the dominant negative GEX and dominant positive gamma exposure, are 38 and 4100. That's unchanged. So that's the overall absolute movement areas that we anticipate staying within. Want to draw your attention to 4050 in the SPX. This is an important level. We've got a number of lines that are coming off in the next couple days, and the bulls need to step up. And frankly, we're not seeing the bulls step up. Transitions are moving upward. We follow the what we call minus trans and plus trans, or negative trans and plus trans, and they are moving up. This is a good thing. This shows the overall structure. Think of a helium-filled balloon. Think of the overall structure moving up, and if you believe that price follows gamma, this is overall constructive for the bulls. That being said, we are seeing the emergence of a new lower transition. This could become a downside target if the bulls lose control. Why this is important is that if the bulls do lose control, we'll see some in-the-money puts in-the-money calls, start to get monetized, further exacerbating a downward move, and we could see puts being opened, and the first neutral area is a lower transition zone. That's not good, so we'll have to wait and see what's happening here. We do think a lower line in the sand for today is this 39.75, 39.85 area. A close below 39.85 would embolden the bears, and the bulls really need to fight this battle and step up. We are not seeing an absorption of the end of March 40.65 JPM strike. Until we do, both in the deltas as well as the gammas, we think this limits the upside movement. Now, there are a few caveats that we could talk about, but the bottom line is we think upside 40.65 is probably the upper range for the near term. We need to see additional speculative calls, like I was saying, added above 39.85 up through 4100. We're not seeing that right now, and we think that could be favoring the bears overall. Cumulative tick, here's that 52-week new high, new low. You can see very consistent, very, very solid. So we are getting broad participation in the markets. Note here, no sense of urgency on the filtered cumulative tick. You can see where the big boys and girls have stepped in recently, and yesterday was a coasting day. So they're sitting on their hands, and that's what gives rise to this, where you have just this horizontal movement in the bolded CT. So we can break either way here. We're not very extended. We are higher than we were last week, but nevertheless, a little bit of consolidation probably is not a bad thing. But the bulls really do need to step up here. Long-term trend is intact. The slopes are positive. The shortest MA, which is red, is over the cyan one. So overall, this looks like a very good, healthy, consolidating, but very healthy structure. Signals that we're watching for today, we do have a couple that I want to draw your attention to, Deere and United Health on the 0 to plus trans entry. And we're also watching some of the ETFs here, and then SunPower on a what we call a plus trans to plus gex entry. We have no new CT signals, so these could be a little tenuous. It's always good to take it when the CT is doing something and showing that upside momentum. Nevertheless, these could be something worthy of review. Key levels, slightly weaker level on the deltas over on the PM side. The combo side over here, everything is solid. Slightly higher expected move. This is an open high-low close. It's conservative. It's meant more for the people who sell premium. So selling premium above the 4100 and down below the 3930 level probably is not a bad, it's probably a safe thing to do. The PM settled complex, significantly weaker than it was yesterday. This means for all intents and purposes that we're not seeing the call structure go in and really start to dominate the conversation. One thing to note, the transition range in the complex, in the PM settled complex, has tightened dramatically, and you can see we can go down into a couple different areas. What's of interest to us is this 3925 area, and we've got a lot of delta and a lot of solid put dominated gamma in here, which is normal. We expect to see this. These are all in the money calls, and so they of course are dominating the conversation. Overall, the structure looks okay. The 3880 line has not moved, so we're not seeing any fear, any speculation to the downside. So don't want to paint a picture that everyone needs to run for the exits on the bear side there, but something to pay attention to. We're right in transition. It opens up the door to this line, this 3985 line. It's a fairly good line. 3975, again, fairly good line, fairly good gamma level. So if we start moving down through this area, we could get spit out, and just want to pay attention to that. The 0 DTE upside 4100. You can also see that's the call open interest expiry for today. So these are the dominant levels that are in play. Look at this 4050 level. This is if we move up, this will grow because of the 0 DTE nature. If we drop, look at the 3985, 3975 zones. Those are going to grow dramatically, right? So we're probably bound today between this 3975 and 4050 levels, and play it accordingly. Could be great setups for some butterflies or broken wing butterflies. Do want to point out we've got this node structure in the deltas that is developing. This is unusual, but it is a 0 DTE. It will resolve itself by the end of the day, but note that means there's a delta 0 here and a delta 0 here. Nothing up here, so a natural place for this to go. We see it all the time, is where the exposure in the markets are minimal, and we would not be at all surprised to see a 3990, 95 hiding zone, or even a 7580 hiding zone, so just be aware of that. Taking a look at the 1 DTE, first of all, extremely weak. Hard to read anything into this. We don't torture the data to tell the story we want to hear. The structure for tomorrow, which is a Thursday, the Thursday look-aheads, Tuesday, Thursdays are generally weak to begin with. So balanced, just slight net calls coming off. Then we have in puts. The overall takeaway is that there are numerous hiding places that we see into the close today that could be influenced by tomorrow. The numbering is my order of preference. If we do fall below the 4,000 strike, just note there are some doors opening to the south, and we'll want to pay attention to that, but we think those are pretty low probability. Looking at the balance of the week, the crystal ball as we call it, highly unlikely we're going to push anywhere near this, and that's because of this 40-50 line, and we also know that the JPM strike that you'll see on the next slide is really dominating all the air in the room at the 40-65. So we think we're limited to the upside in this particular area. This is the expiry for the week, right? So this is coming off, and the first thing that should jump off the page at you, it's a lot of green, right? So we got a lot of call-dominated deltas that are coming off. These are out of the money. These are in the money. And so bears, could get emboldened if the bulls don't step up and keep adding those speculative calls. So we really need to see this area grow up here, and we haven't been seeing that. Here's why we think that 39.85 zone is pretty important. And then again, don't forget the 39.75, and then to the upside that 40.50. And we have this structure existing through the end of day Friday. Taking a look at the combo. Combo is the AM and the PM settled all thrown into one cauldron here. 40.60, 40.65. Here's that 40.50 line again, right? So this is going to be an area that we know will grow for the week, just based on all the views I just presented to you. Transition structure, here's the development of that secondary transition structure to the downside. If we start seeing some of these calls actually vaporizing into puts, speculative puts, not likely, just given the magnitudes of what we're seeing here. But if we start to see this, that you can tell that the transition structure could appear down here also. And if the bulls give up the battle, this could be a downside target. The time frame would be, anytime the balance of this week into next week. We'll just have to wait and see what happens here. To the upside, 4,100 is that right goalpost, and as we said earlier, the 3,800 not shown here is the lower goalpost. Don't think we're going down in that zone that far down this fast, but just be aware of what the structure looks like. Finally, last slide, 4,100, 38, as I just said, we're sitting right here at transition. This is why we follow transition. For the folks out there who have expressed criticism or whatever the case, if you don't follow transition, and we do religiously every day, and we have tools for you to do it yourself, transition is an area of low exposure. It's low exposure in delta, it's lower exposure in gamma, and that is where the dealers can go into the overnight and not have to have a lot of news event, a lot of change in price exposure. So we see transition all the time. You can see we're right below a major level. This is normal. This is a movement upward in transition from where we were yesterday. I would urge everyone to go back and look at prior presentations and teach this to yourself. This has been a very, very eye-opening development in the world of delta and gamma. At least for us, we don't think others are as serious about this as we are, and we certainly think there's something to be watched here. Here's the development of that lower node that we were talking about. If we get into any trouble here, and look at the 4,000 strike, right? Just think of where we were just a few days ago. This thing was massive, right? And now it's just completely collapsing, but we're right by it, right? So what does this tell you? This tells you that the calls are being neutralized and that the puts are going in, and it's neutralizing the overall gamma exposure for that particular area. So transition is moving up, which favors the bulls. This is a good structure, right? We are in a good spot to continue to go north, but the bulls need to continue the action. We also need to see this 40.65 get neutralized, at least come down and be effectively a nothing muffin, and then the end of January is actually the near term JPM strike, and this thing is starting to grow because it's the end of January. Even though it's a third the size of this in terms of open contracts, remember this is the end of March, this is the end of January, we do expect this thing to grow. So what we want to see, our calls go in, effectively neutralizing this. This will continue to grow and probably put an upside limit on this. We've got this upper goalpost at 4,100. We're seeing transition move up. There is a bull case here. The bulls just need to do their job. There is a bear case, and there generally is. But note, it's unchanged to the downside. It's unchanged here. We may see a good push and a good run upward, but a few things have to happen. So with that in mind, I'll leave you for now. Follow us on Twitter at GammaEdges. Come and visit us. Kick the tires in the Discord. All these tools turned on. 14-day free trial. Click on or go to GammaEdge.us, click on the pricing tab and fill out the blanks, and pretty easy to do. And then here on YouTube, of course, thank you for everyone who is smashing that like button, giving me immediate feedback that I'm providing the information that you want to see and helps make this actionable. And of course, we want you to subscribe to our YouTube channel because Taylor, myself, and Michael are posting videos, generally 2 a day, sometimes 3 a day, and would like you to see what we're seeing and help you figure out how to apply this, if it makes any sense, to your trading style. So with that, I bid you farewell. Make it a great hump day and hope to see you in the Discord. Thanks, everyone.